Yes, a very good morning to all of you. Right, so did you have a look at the SRE, the Standards on Review Engagement? Right, so we've completed with the 700 series, then also completed with the 800 series, right, which is the special purpose framework. And then after that, you have the single financial statement, specific element, account, or item of the financial statement, what we call it as chotu, instead of doing the audit of the complete financial statements, you are doing an audit of the part of the financial statement. So for 800, 805, it said that it could be the same auditor or it could be a different auditor. And then we came to SA 810, which is regarding the summary financial statements, which are derived from the audited financial statements. And in this case, it has to be the same auditor. And the auditor has to express an opinion whether it is a fair summary, right, or whether they are consistent with the audited financial statements. Okay, right. So again, for the summary financial statements, same everywhere: acceptance, planning, performing, and the reporting. Right. So the procedures and the reporting. Acceptance, in case of summary, what is unique? Acceptability of the applied criteria. Generally, we talk about the main condition being the acceptability of the AFRF, but in case of summary financial statements, we talk about the acceptability of the applied criteria, that whether it is an established criteria or whether it is a criteria which has been developed by the management. Then preparing summary financial statements in accordance with the applied criteria, we say management, your responsibility to make audited financial statements available without undue difficulty, unless law regulation says that they need not be made available. Again, management's your responsibility, right? Then the expected form and content of the report, again, that you need to agree while accepting the engagement, right? That you need to agree with the management. Then after that, we came to the procedures, right? So 7 procedures for an engagement to report on the summary financial statements. So 1, summary financial statements, whether they adequately disclose their summarized nature. Then whether they adequately disclose the applied criteria. Yes, adequately disclose the applied criteria. Then whether they are prepared in accordance with the applied criteria. Then you compare the summary financial statements with the audited financial statements. Then you check whether they are at an appropriate level of aggregation. Okay, being summary, you deleted some very significant transaction or event that should not have happened, right? So that is what the auditor needs to check. Then the auditor needs to verify that whether in the summary financial statements have they disclosed, okay, from whom or where the audited financial statements are available. And then point number 7, auditor, you need to verify, okay, are they really available where they are said to be made available, right? So those are the procedures. A very important question in SA 810, right? And then we talked about the reporting. And what if the auditor's report on the audited financial statements is qualified, or it has an emphasis of matter or other matter, right? So now in your audit report on summary, you say that the audit report on the audited financial statements is qualified, EOM, or the other matter, right? Then what you say, you copy paste the basis for the qualified opinion, emphasis, other matter, and then you give the effect thereof on the summary financial statements. And in case if the auditor's report on the audited financial statements is adverse or disclaimer, right? 1, you state that the report contains a qualified or adverse or disclaimer or the audited financial statements. Then copy paste the paragraph and then say, because the auditor's report on the audited financial statements is adverse or disclaimer, it is inappropriate to express an opinion on the summary financial statements, right? Then subsequent events, right? Subsequent events between the date of audit report of the audited financial statements and the summary financial statements have not been considered, right? It does not reflect the effect of those events. And wherever management is going to tell the users, yes, our auditor, he is not only given us a report on the audited financial statements, he's also given us an audit report on the summary financial statements. It says that report should be attached to the document, right? That report should be attached, right? So it is not that the auditor has done the audit only of the audited financial statements and they are telling that, oh yes, our auditor has given report on both audited as well as summary financial statements. No, right? That confusion. So in case if that is what the management is trying to do, then auditor needs to take the appropriate action. He should tell management to delete the reference, or he can tell them that you tell me to do the engagement to report on your summary, I will give you the report and then you attach the report. But wherever you are going to say that our auditor has given a report on the summary financial statements, simple rule, the report should be attached along with it. Like I told you, on the car, the logo of the car has to be there, something like that. Okay, right? So that completed our discussion on the 800 series, right? So at least one question, right, from the 800 series could be expected in your exams. So as such, if I take an outline of this 800 series, what do I need to know? Okay, what is the special purpose framework? What is the single financial statement specific element account item? And what is summary financial statements, which are derived from the audited financial statements, but which contains the less details, but still provide a structured presentation, right? So first it's like the introductory part, and then for all the three standards, I need to know the acceptance, planning, performing, reporting, right? APR, acceptance, planning, performing, and the reporting, right? Then after that, we came to chapter number, yes, 10, which is regarding the review of the financial information, right? So that was SRE 2400 and SRE 2410, right? Is audit same like review? Right? Audit, you get your financial statements audited, you get your financial statements reviewed. Is it one and the same? Right? Yes, is it one and the same? No. What is broader in scope? Audit. Why? Because it has 38 standards, and review less in scope as compared to an audit. Why? Because it has only two standards, right? 2400 and 2410, right? So obviously in an audit, we give the reasonable assurance, RA, reasonable assurance that financial statements are free from material misstatement. And then we also identify and assess the risk of material misstatement in an audit, right? Whereas in a review, we give a limited assurance that financial statements are free from material misstatement, and we identify and assess the LMM, correct, the likelihood of the material misstatement, the potential material misstatement, right? The potential material misstatement. Okay. In an audit, the reasonable assurance is given in the form of a positive assurance. Okay. Financial statements give a true and fair view, or they are prepared in accordance with the AFRF. Whereas limited assurance is always to be negatively worded, right? It has to be negatively worded. You give a negative assurance over there. You say minus, minus, plus. Nothing has come to our attention that causes us to believe that the financial statements do not give a true and fair view, that they have not been prepared in accordance with the AFRF. That means what? They are prepared. That means what? They give a true and fair view, but limited assurance has to be given in the form of a negative assurance. Then in an audit, we mainly have these 7 methods of obtaining the audit evidence. That is the ICAIORR. Right? What is that? The inspection, confirmation, analytical procedures, inquiry, observation, recalculation, and the reperformance. Whereas in a review, right, mainly the procedures which are performed by the auditor are, yes, what you mainly do in a review, right? What are the procedures performed by the auditor? Inquiry and the analytical procedures. Then can you perform additional procedures also? Yes. Can you perform other procedures also? Like, sometimes you're checking the accounts receivable and then you see that, oh, there is a lot of, I think the provision for bad debts is not proper. So in that case, I do the inspection or I obtain the confirmation, right? So in that case, I perform the other procedures, right? So it says you could be performing the other procedures. And what did we say? Review is a mini version of an audit. It is type of an audit, like type of an examination, but only the assurance is less, the checking is less. Right, listed companies, we saw yesterday a few reports where SEBI regulations, right, listed companies quarterly, either they have to declare their yes, either their audited results or their reviewed results. So what they had written, unaudited review results. Okay, these are not audited, but these are review. Right, in an audit we express an opinion, right? So what we say, audit opinion, right? In an audit, we express an opinion. Whereas in a review, we give in a review, do we express an opinion? No. In a review, we express a conclusion. Exactly. So we say audit opinion and we say review conclusion. Right, so there it is the qualified opinion. In case if it is qualified in audit, here it will be qualified conclusion. Right, here it would be the qualified conclusion. Are you understanding that? Right, so that was the difference between the audit and the review. Right, okay, what is different between difference between an audit and a review? Right, what is common about it? Okay, both of them are post-mortem activities. Both of them are performed for the historical financial information. Okay, right, and then after that we came to the difference between 2400 and 2410. What was the title of 2400? Engagements to review the historical financial statements. Right, so again it's historical engagements to review, and 2410 review of interim financial information performed by the independent auditor of the entity. Right, so the uncle who is doing the review, can you in SRE 2400, that uncle you will have to call him that uncle who is doing the review in SRE 2400, that uncle, yes, we have to call him the practitioner. Exactly. We can't call him as the reviewer. There is no term called as reviewer. Right? You cannot call him as the auditor. Why? Because he is not the auditor. But the uncle who is doing the review as per SRE 2410, that uncle, can we call him as the auditor? Yes. Right? That person we can call him as the auditor. Right, so here we say it is the practitioner's report, practitioner's review report, an independent practitioner's review report. Whereas here it is what? The independent auditor's review report on the interim financial information for the quarter ended 30th June 2025, something like that. Right, so that is the independent auditor's review report. Right, it's the review report. Okay, right, so that I told you, okay, 2400 was one old standard which was revised, and 2410 relatively a new standard issued over there. Right, but in the exams you have to be careful. If they are saying the auditor is doing the review, then you write down 2410. They say a CA is appointed to do a review who is not the auditor of the entity, then you mention about 2400. Right, so everybody, is it like for sure okay, you will now never forget or never say that, oh, I don't know what is summary financial statements, oh, I don't know what is audit of a single financial statement or specific element account item, or I don't know what is special purpose framework, or I don't know regarding what is a review engagement and how is it different from an audit engagement. Right, no no's now. Right, everything has to be an yes now. Right, anybody, any questions? Yes, regarding what we have discussed yesterday, right? Anybody of you have any questions? Let me ask my hopeful question over there. Has anybody of you prepared the chart? Right, you prepared the chart. Have you prepared any analysis, any snapshot, right, of whatever we have discussed? Acceptance, planning, performing, and the reporting. Okay, right. So first we studied what is the review. Then most important kya sentence tha? One to we forgot na. Okay, in an audit we obtain the, in an audit what type of evidence we obtained is the sufficient appropriate audit evidence. Whereas in case of a review, what type of evidence we obtain is the sufficient appropriate evidence. And there we only say sufficient appropriate evidence, right? We don't say sufficient appropriate review evidence or something like that. It is simply sufficient appropriate evidence, right? So in a review, we have to obtain a limited assurance, right? That is a negative assurance, right? Limited assurance by performing the inquiry and analytical procedures. And on that basis, we have to reach a review conclusion. Right, so what did we say? We have to obtain a limited assurance. For obtaining that limited assurance, we need to do the inquiry and analytical procedures. It is primarily limited to inquiry and the analytical procedures. And then based on that, we have to reach our review conclusion. Right, and then we started with our discussion on SRE 2400. The person who is not the auditor has been appointed to do the review of the historical financial statements. Okay, right, so now when they are telling me, CA, practitioner, please do this review, right, please do this review. So one, you need to check, okay, why are they preparing, why are they getting a review done? Is there a rational purpose? Because getting a review done, is it like a substitute for getting an audit done? Like we said, no, reading summary financial statements is not a substitute for reading the audited financial statements. Right, so getting a review done, they say, audit fee 20 lakh, review fee 5 lakh, so better we just get a review done. right? So one, what does it say? Whether there is a rational purpose. Okay, why are they getting a review done? Right. Then after that, what does it say? Okay, whether an audit would be more appropriate in their case. Right. So it says, no, you guys, why you're getting a review done? You need to get an audit done. I told you, okay, why you are attending fast track? You should attend the regular class. And that example we had taken over there. Right. Then after that, you also need to check the integrity of the management. Right. Whether you think that whether the information will be unavailable or unreliable. They may not give you the information. That means a limitation on scope could be imposed on the practitioner. Or he says, I cannot comply with the ethical requirements, including the independence. Then it says, practitioner, do not accept the engagement. Right. Do not accept the review engagement. When you think there is no rational purpose, I don't understand and why they are getting a review done, or you say why they are getting a review done, they should have got an audit done and they need to get an audit done. Or what you think that you have doubts regarding the integrity of the management, that there is a limitation on scope, that information may be unavailable or unreliable, or you think that you cannot comply with the ethical requirements, including independence. Any of this is in the negative. It says don't accept the engagement. And if none of the above problem is there, then you accept the engagement. And now if you accept the engagement, the same 5 preconditions, 1 plus 5, which we had discussed in SE 210 for our audit, right? The acceptability of the AFRF, right? So that is again first precondition. Then preparation, presentation of financial statements, management, your responsibility. Internal control, management, your responsibility. Then to provide the practitioner with all information, additional information, and the unrestricted access, right? All this is the management's responsibility. So it understands and acknowledges its responsibility, right? The management. And then once the management agrees with your preconditions or all these points over there, then it says you issue the engagement letter, right? So engagement letter, you could issue it to the management or to the TCWG. And then we said sometimes you're required to revise the engagement letter, right? There is a change in the terms of the engagement, right? In that case, sometimes if there is a, management has imposed a limitation on scope prior to acceptance, then you don't accept only such an engagement. After acceptance, then you see whether you can still continue with the engagement, but then you will have to revise your engagement letter, right? Issue a new engagement letter. And if you cannot agree with the revised terms of the engagement, then you may decide to withdraw, either give a disclaimer or you may decide to withdraw from the engagement. Right, so that was regarding the acceptance part in SRE 2400. Then we came to the procedures part. Does anybody remember the 5 procedures in SRE 2400? Does any of the student remember the 5 procedures of SRE 2400? Procedure number 1. We have to, yes, wonderful. You have to first determine the materiality. So just as you determine the materiality for an audit, now here you need to determine the materiality for the review engagement. Okay, right? Then can this materiality be revised also? Yes, the materiality could also be revised. Okay, then after determining materiality, now you need to understand the entity and its environment, including the significant accounting transactions, AFRF, and all of that. Right, so SA 315 type, understanding the entity, knowledge of the client's business. Then you do your main bread and butter, that is you perform the inquiry and the analytical procedures, which will help you to identify and assess the likelihood of the material misstatement. Right, identify the possible, right, material misstatement is likely. And so LMM we said likelihood of material misstatement. So that is inquiry and analytical procedures. Then you may perform the additional procedures to address the specific circumstances. Right, so you may perform the additional procedures, and then last one, you may perform the other procedures as necessary in these circumstances. Right, you may perform the other procedures as necessary in these circumstances. Right, so you main procedures, that is point number 3, is what it is regarding the inquiry and the analytical procedures. Right, so what you do, you make inquiries of the management. Inquiry regarding what matters? We have seen like 7 matters over there. And a related parties, subsequent events, fraud, non-compliance with law regulation, going concern, any commitments, significant contracts, contractual obligations or so. Right, so we make inquiries of the management. Then we also make inquiries of the management regarding the non-financial data. Then if required, we also make the further inquiries of the management. And We make an inquiry, they give a response, but even evaluating that response is an integral part of the inquiry process. Right? So this is what we do in the inquiry in the review procedures. Then we perform the analytical procedures, again to understand the entity and to identify the LMM, the likelihood of the material misstatement. And then there was an example given over there of the accounts receivable. Right? There was an example, okay, if there is a likelihood of material misstatement, you will do the more checking. Right? The additional procedures will have to be performed. Right? You may even do the inspection in that case. Right? And now in inquiry, you will also inquire about the actions taken at the meetings of the board of directors, shareholders, the communications which they have with the regulatory agencies and any other matters. Right? So that also you will inquire. And for performing analytical procedures, it says various methods can be used, from simple comparisons to the complex analysis. Right? So that was one question, right? I could just show you to